The Self Credit Builder is an interesting tool for anyone looking to establish or rebuild their credit while also setting aside some savings. If you've ever struggled with getting approved for traditional credit cards or loans due to a lack of credit history or past financial missteps, this might be a great option. What's nice about Self is that they don't require a hard credit pull, which means your credit score won't take a hit just for applying. Instead, you sign up for a credit builder account, make monthly payments, and those payments are reported to all three major credit bureaus. Over time, this builds your credit history and boosts your score, assuming you make those payments on time. It's a simple, structured way to prove financial responsibility, which is a huge factor when it comes to improving your creditworthiness. Yeah, one of the biggest selling points of Self is that you get your money back at the end of the term, minus interest and fees. It's almost like a forced savings plan while you're improving your credit. They offer different plans depending on your budget, starting as low as $25 per month. It's a pretty accessible way to work on your financial health, especially if you've had trouble getting started before. They also have a secured credit card option, which can be a solid next step once you've built some positive payment history. This can be helpful because in order to build good credit, you eventually need a credit card in your name. Self makes that transition easier by allowing you to unlock access to their secured card after showing responsible payment behavior. Another great feature is that they report to all three major credit bureaus, Experian, Equifax, and TransUnion. Many credit building options like rent reporting services often only report to one or two, which can limit their impact. But with Self, your positive payment history gets recognized across the board, making it a more reliable way to establish or improve your score. They also provide credit tracking so you can see how your score changes over time, which is a nice motivator to keep up with your payments. The ability to automate payments is also a useful feature because it reduces the risk of missing a due date, which is crucial when trying to build or repair credit. Now, while Self has a lot of upsides, it's not without its drawbacks. First, the interest rates can be a little steep. Even though you're essentially paying yourself, you'll end up paying more than you put in due to interest and fees. For example, on the lowest plan, you pay in $600 over 2 years, but you only get back around $511, meaning you're paying almost $90 for the service. While that might not seem like a huge amount, it's worth comparing to other credit building options, like a secured credit card with a refundable deposit, where you might not lose any money at all. Additionally, this isn't a quick fix. It requires a commitment of at least 12 to 24 months, which might not be ideal if you need to improve your credit quickly for something like a car loan or mortgage. Another thing to keep in mind is that while Self can help build credit, it won't fix deeper financial issues. If you're already struggling to make payments on existing debts, adding another monthly payment, even if it's small, might not be the best move. Also, since this is a loan-based system, if you fail to make payments, it could actually hurt your credit rather than help it. So it's important to make sure you're in a position to commit to the full term before signing up. Overall, if you're looking for a structured, beginner-friendly way to build credit while also setting aside some savings, Self is worth considering. It's not a magic solution, and it's important to weigh the cost versus the benefits. But for those who need a starting point and struggle to get approved for other credit building tools, this could be a solid step in the right direction. The fact that it's available in all 50 states and doesn't require an upfront deposit makes it accessible to a wide range of people. Just be mindful of the costs and make sure it fits within your financial goals before committing. If used correctly, Self can be a great stepping stone to better credit and financial stability.